So I think that the economics are the best ever for the hotel industry just now. And investors should really keep in mind that the hotel industry is entering a golden phase, and maybe you should be overweight in this sector.
Hey guys, welcome to the 29th episode of the Indian Market Story. As you know, we're always here to talk to you about how India is going to get the $5,000 in per capita GDP by 2030. And of course, one of the big things Indians are spending money on nowadays is holidays and experiences. And one of the main beneficiaries of this expenditure is going to be hotels. So we're here once again with our returning guest, Mr. Dipan Mehta, to talk about the hotel sector. Let's get to the million-dollar question immediately, right? How have hotels done post-pandemic? Because everybody knows that everything was shut down in the pandemic, and travel and hotels have taken a long time to open up. Where are they now?
Varun, thank you for having me on your show. It's a pleasure. It's a no-brainer. If you are going and spending on holidays, you are seeing that you are spending 30, 40, 50% more than pre-pandemic on air travel and on the hotel stay. Not just in India, but globally. So I think that the hotel industry in India is entering a golden phase. After 10, 15 years of underinvestment, overcapacity, underutilization of assets, we have reached a stage where there is a surge in travel, and that's really having two important effects. One is the utilization levels have gone up for the hotel industry, and the average rent that they have been able to recover from their customers, that also has shot up. So this is a great period for the hotel industry per se.
I want to try and provide some context for our viewers as to what's been going on with the hotel industry. Just to highlight your point about how the last 10, 15 years have been so bad for them. Perhaps longer even, because if I look at the list of companies I have, they've been immense wealth destroyers from a price performance perspective. So Indian Hotels, Taj, which is our crown jewel, over 29 years has returned a compounded yield of 7.5% for investors. Mahindra Holidays, which is another darling of the space, over 14 years has returned 6.7%. Lemon Tree, a relatively new entrant, over 6 years they've only returned 10.1%. East India Hotels, which has been around for 34 years, has only barely beaten the index at 12.9%. And Chalet Hotels, which is again a relatively new listing, has over the last 5 years yielded 17% for investors. So they've been giant wealth destroyers. I think these last 10, 15 years have been particularly bad. But what's different now? Why is this a golden period for hotels?
See, I think hotel industry, like many other industries, is cyclical in nature. And if you compare Indian cities, the number of hotel rooms to any country in the world, we are amongst the lowest, right? So you consider Dubai, London, Singapore, the number of hotel rooms they have and number of hotel rooms that are there in Delhi, Mumbai, Calcutta, Bangalore, Hyderabad is much, much lower. So we are in a way underinvested in terms of capacity per se. And also I think to an extent, travel had been pretty much soft over the past several years or so up to the pandemic. Of course, in the pandemic, it went down to zero. But now I think with the way consumption patterns are changing, especially your generation, which believes more in experiences than actual assets, they're spending more and more on travel. And we've seen the last 4 or 5 years, salaries have gone up. And that's led to more and more holidays by the new generation, the young people. They want to travel more. And that's led to a surge in demand for good quality hotel rooms. And Indians, by and large, don't mind paying a premium for a premium property. Gone are the days of low-cost holidays.
So I want to actually talk to you about this point that you made about, Indian cities having the lowest ratio of hotel rooms per capita. Because one thing that's particularly different about India and Indian travel patterns in comparison to anywhere, if we look at the West, is that Indians are very, very comfortable staying at a friend's or staying at some relatives or staying at, a friend of a friend's place as well, just roll down a mattress, spare room, something like that. So my sense would be that the structural demand for hotel rooms in India would be lower than anywhere else in the world because of this phenomena.
You're right, Varun, but how many people would have a friend in Udaipur or Jaipur or Agra or some of the tourist destinations? And that's where the Indians are flocking to, per se. Also, keep in mind that India Shining and the kind of interest which India generated globally is pulling a lot of foreign visitors as well into India. Tourism has been one of the most, sectors where Indian government has given a lot of importance.
Mm-hmm.
Atithi Devo Bhava,
Yeah.
right? So that's attracting a lot of foreign tourists as well, especially post-pandemic. And local travel also has picked up. Also, economy is picking up.
Mm-hmm.
And that's causing a lot of business travel as well. So, I mean, of course, the effect of Zoom meetings and online meetings is there, but that really doesn't take away the fact that there are so many seminars and so many events and exhibitions happening, which is also attracting a lot of visitors. And one last thing, the marriage market.
Yeah.
The big fat Indian wedding is getting fatter and fatter.
Yeah.
And destination weddings are the ultimate.
Right.
So a lot of the big hotels are great venues for destination weddings, and that really gives them very high billings.
Well, that's absolutely right. And that's not something I had accounted for. The impact of the marriage market on that bottom line must be immense. So let's talk about what makes a good hotel business versus a not good hotel business, because I'll run down the list of some of these companies. It seems like there's some that do very well and there's some that don't do particularly well. So how do you break down a hotel business?
The success of a hotel depends on many factors. Of course, there's location. Second is the cost of setting up the hotel, how much you spend per room. The third is managing the human manpower. It's very manpower intensive, and getting the right kind of staff, managers, right down to the waiters is a very challenging job for the industry per se. And lastly, there's a lot of government regulation as well, right from construction of the hotel to operating it. So it's a complex business, not very easy to do. And you really need to have a very long-term focus to be in the hotel business, because it takes a very long time for these hotels to start to start giving returns on the investment which you have made. And then there's the constant cost of refurbishing, repairs and maintenance. So from that point of view, a lot of investors had shied away from hotels. Even hotel companies themselves are not expanding until just now. So it's a complicated business, but now I think it is going to come of age.
Okay. So another point I wanted to highlight, and the truth is, with every podcast we do the figures, but with hotels in particular, the figures are all skewed. So I think, particularly for our viewers, please take these figures with a pinch of salt, because the 2-3 years of the pandemic, FY21, FY22, they look very, very different in comparison to the rest of the years. But one thing I wanted to talk about, because we talk about finding the right location, the cost of setting up the room. It seems to me that these are not particularly capital efficient businesses.
That's right. And I've always felt that to set up a hotel, you really need to have passion and need to have that kind of a mindset to do the hotel business. It doesn't really make financial sense until maybe just now, because these businesses never gave great return on investment. But one of the positive upsides is that it's a property business. So the value of the property keeps going up and up. So that's what attracts a lot of hoteliers, that I buy a plot, I set up a property, and even if it breaks even, I don't make much return on the investment, but I'm getting huge upsides on the land and the building which I have constructed. And that is not getting captured very often in the price to earnings multiple or the valuation of the shares. Like Indian hotels, when you come to it, can you add up the total replacement cost or the sale value of the properties will be a multiple of the market capitalization, and this is true for all the hotel companies.
Right. And I think maybe let's just try and highlight that point for our viewers, because we always try and use PE as a valuation yardstick, and for these guys it's really very much out of whack. But I guess it's explained by the property value that's locked in the business. So Indian Hotels trades at 52, Mahindra Holidays trades at 123, Lemon Tree trades at 75, East India Hotels trades at 32, and Chalet Hotels trades at 52. So very expensive businesses, but a lot of value on the balance sheet, I imagine.
That's right, Varun, and you're looking at historical ratios, but you see the quarterly numbers of all these companies. They've been exceptional last 2-3 quarters or so, and going forward also, they'll be quite phenomenal. So if you do this podcast 12 months down the line, these P ratios may be 30-40% lower also.
Mm-hmm.
So keep that in mind. And it's a cyclical business, as I said, and we are entering into an up cycle at this point of time. At the same time, the market capitalization of these companies is very low as compared to the potential which is there.
Mm-hmm.
And these are companies which have got now the assets on the floor,
Mm-hmm.
Though it's only a question of increasing their productivity,
Mm-hmm.
and that's really going to increase the profits for the companies, because these are great operating leverage companies as well.
Right. Yeah, that's so do you want to explain the concept of operating leverage and why operating leverage will be really transformational for these companies for our viewers?
So let's just take Indian Hotels per se. They've got whatever X number of rooms in a particular hotel. They've already spent the money on setting up the hotel. It's been fully staffed, and so in 1 year they do 100 crores revenues from there, and their cost of maintaining the hotel is 90 crores. So they make 10 crores profit. For some reason, there's a surge of visitors, and they raise the average rent per room, and they earn 120 crores from 100 crores. But the cost won't go up from 90 crores proportionately. It'll go to maybe 100 crores or so. So their profit will double, although the revenues go up by 20%.
Right.
That's operating leverage, and that's going to be the key underlying factor in improving the performance of all these hotel companies.
That's very interesting. So just to try and simplify it one level further, is it fair to think of it as last year you were selling 60 rooms out of 100 and breaking even? This year you're selling 90 rooms out of 100, or 80 rooms out of 100, which is a 33% increase in your total top line. But now your bottom line, that all the remaining 20 rooms, the new 20 rooms that you sold, that's pure profit.
All the revenues flow to the bottom line.
Right. Okay. I think I understand that, and I hope our viewers do as well. So let's talk about stock selection. I'll list out the names in the space to you, and why don't you decide which order we'd like to evaluate them in. So you've got Indian Hotels with this Taj. You've got Mahindra Holidays, Lemon Tree, East India Hotels, and Chalet Hotels. How do we want to analyze them?
So Indian Hotels is the absolute bluest of blue chip hotel company, and it's clearly a brand we can see ourselves associate with. It's been around for decades, and what is the most impressive part about Indian Hotels is that under the new managing director Puneet Chatwal, they have really scaled up their operations. They have focused very heavily on capital efficiency, and they have focused very heavily on branding. And they have created many new brands also within the company per se. The locations are exceptional, as you know. And because of the Tata backing, they have got the money, the balance sheet to invest in their properties as well. And now the company, most amazing part is focusing on managing properties rather than owning them. So they get a cut of the revenues of the property they are managing, but they don't have to invest in the land and the building and the renovation costs. So that is going to really improve their return on capital employed, because they will get the revenues, but they won't have to spend on the capital cost of setting up a hotel. Also, they have got key marquee hotels in the gateway cities like New York, London, Singapore, Hong Kong. And that also brings in a lot of tourists for them. At the same time, they are following a very aggressive strategy. And most importantly, they are there in every segment, means super luxury, business, low cost, across the chain.
Where are they in the low cost segment?
So they have got certain brands, when they in the low cost as well, like the President Hotel, which is there, and there are other sub brands which they have kept, which is that the business travel is where they are focusing on.
So I have two questions with Indian hotels in particular. Because they operate at such a premium segment, are they do they stand to benefit substantially from the premiumization trend that's happening, or is that played out? That's one. The flip side is because they're such a premium brand and such an expensive hotel, are they more vulnerable to the cyclicality of the hotel business?
You're right, Varun. It's a very good point that whether premiumization trend is played out or not, and I don't think so. I mean, I've been traveling to Indian hotels for the past several decades or so, and the discounting which is there just now is amongst the lowest. More often than not, visitors have to pay the rack rate. So they're really, getting the maximum yield out of the properties which they have put in place. They are using those profits to refurbish and keep the properties really fresh again, and that's attracting even more tourists and visitors. So they're in a nice virtuous cycle for them, and that's playing out really well. At the same time, Varun, one important highlight is that, as I mentioned earlier in the show, is that we are underinvested in the hotel industry, and a large player like Indian Hotel is coming in and it is trying to build hotels where there were none, because they have the balance sheet, they have the talent, they have the know-how,
They have the brand.
they have the brand. So they're really playing on all these trends just now.
Okay.
Therefore, I think the future of Indian hotels is very bright, and you will see that whatever the market capitalization is going to gradually keep on moving up over the next 4 or 5 years or so. And Varun, I wouldn't worry too much about the cyclicality. In my opinion, last 10 years, up to the pandemic, the hotel industry has been underinvested. We've hardly added rooms because of the poor economics. And now to play catch up is very difficult because these are not projects you can set up in 1 to 2 years. A hotel takes 3 to 5 years to construct, and even longer to get it profitable and attract the tourists. So it's a long gestation business. So I think that the economics are the best ever for the hotel industry just now. And investors should really keep in mind that the hotel industry is entering a golden phase, and maybe you should be overweight in this sector because the numbers will certainly surprise you on the upside. And don't get, I would say, stunned by the price to earnings multiple which you have just spoken about. It's just a matter of time.
So I know you say to ignore the PE and okay, Indian Hotels is 52, it's a premium brand, whatever, fine. Great properties, we'll ignore the PE. Let's talk about Mahindra Holidays. And I want to put a really, really interesting number up front. Mahindra Holidays has a PE of 123. How?
Business model of Mahindra Holidays is very different. It's a vacation ownership company. So they sell vacation ownership for 25 years, which means that you buy into one of their products, and for 25 years you can use any of their properties without paying any rent for the rooms, but you have to pay for the F&B. And when you pay that money upfront, only 1/25 of that is getting accounted in the revenues of the company. The rest is all carried forward in the balance sheets. So their cash flow is very strong, but what they can record in their books of accounts is much lower, which is why their profitability optically appears to be low, but in fact it's a superb business model because their customers themselves are funding the construction of the hotels.
Fair point. But let's look at the number of members, right? Because that's their customers. Over the last 5 years, that's only grown at a compounded rate of 3.5%. That's not a lot.
Yes, I'm also disappointed with that. And every time if you go to the analyst calls of this company, that's the first question which a lot of analysts are asking the company. And the management is trying their best to grow the number. But it's a concept, don't you think so? I mean, trying to sell a vacation ownership to an individual or a family, to explain to them that you pay anywhere from 3 to 5 lakhs upfront, and then you can go for 25 years on any of the properties. It's a difficult proposition, and it requires a certain element of educating the customer. That is why the growth has been slow so far. But I think post pandemic, there's been a sea change in the family's approach towards holidays, and they are more open to such ideas, I feel.
No, I get your point, and I get why this is such a lovely capital efficient business. But there's two things to me that really stand out. So first is that 25 years is an extraordinarily long time frame. And you're asking Indian consumers that are anyways low trust consumers to invest a lot of money and put a lot of trust in this company, which is a hard sell. That's one. And the second thing is, if I think of it from a family's perspective, you don't want to be taking the same level of holidays for 25 years. In a 10-15 year time frame, you want to move up. If I'm sitting at 30, which is, young fathers, that's who their target market is. If I'm sitting at 30 thinking, okay, I'm taking a holiday and I'm going on a Mahindra property, my hope and my desire will be that by the time I'm 40, I can go on a Taj holiday. And then by the time I'm 50, I can go on an abroad holiday, at the very least. So I would not think that people would want to buy a 25-year-long membership at a single level.
You're right. I think you could pose that question to the management as well, that what happens when you face such resistance from customers. So what they're doing is that they're offering smaller periods as well, 10 years, 12 years as well. Point number one. Second point is they're investing very heavily in their properties and upgrading them on a continuous basis, because they have got fabulous locations. And it's just a matter of investing in the interior, the renovation, to make it to a level of a Taj. And which is happening at a very, I would say, fast pace compared to what 3 years ago, what their properties were and what they are just now. There's a huge change in the kind of ambience, and the actual beauty of the property has improved significantly. There's also the option of gifting these vacation ownership weeks to other family members. You can sell it, rent it. There are many such choices also available. And more importantly, many new properties are also continuously coming in. Also, one more point is that you do not take one full week together. You can break it up as well. So now, apart from going on long holidays, there is this absolute demand for shorter 2-3 day long weekend, take a holiday. That market also is what Mahindra Holidays plays up to.
No, fair enough. I mean, I guess the proof of the pudding will always be in the eating. And if they can't grow their members, then I don't think this is going to work out for them. But do you have a positive view on the company? Do you believe that they'll be able to deliver the returns?
Yes, absolutely. And they just don't rely only on the members. So when the property is not being completely occupied by the members, it is available to the non-members also to pay a rental and use the property. So it's like a hotel company as well as a vacation ownership company. And even when the member does come over there, he's spending on food, beverages, and the experiences.
So I have a specific question here. There's, let's call it the subscription fees and the non-subscription, which is the F&B plus the non-member rentals. Do you have any sense of what the breakup might be if the F&B and non-member rentals is a substantial component of the top line, or is that insignificant, 10-15% or less?
No, it's a substantial portion, and that's what brings the alpha for the company. So the quarters in which non-members use it, they get rental income, or the properties are used by the members, and the capacity utilization is on the higher side, then automatically F&B revenues also go up. So the quarters where this phenomena takes place, this trend is visible, that's when it does best. It cannot just rely only on sale of vacation ownership.
Well, that makes sense. That makes a lot of sense. So let's move on to another company, Lemon Tree. This is a company, I'll be honest, I've never heard of before. Mahindra I knew, Indian Hotels, Taj I knew. Could you tell us a little bit about Lemon Tree? I should also point out, it's much smaller than the other two as well in terms of its footprint. So are they like geographically located? What's the story with Lemon Tree?
So when you start traveling the country on business travel, you can't be too far away from Lemon Tree, because that's their positioning. These are business hotels. More often than not, they may be close to the airport or close to the business district. And this is one company which has gone against the tide and invested very heavily on buying new properties or setting up new properties over the last 4 or 5 years or so. And the performance has been pretty dismal, right up to the pandemic. where the utilization levels were not high and where overall travel was slow. But they've got the properties on the ground now. And I think that in terms of the growth in revenues and bottom line, this company can certainly surprise us on the upside. And there's a huge market for such business hotels and low cost hotels because urbanization is leading to many, many smaller cities. And there's a lot of economic activity taking place in the smaller cities.
Mhm.
And that's the focus area for Lemon Tree, apart from the large metros. So they go to a smaller town and they set up a nice property over there, which is among the premium properties for that particular town. Any case business travel, tourist travel improves to that city, and they're there to capture that traffic.
So I have a question here. So far, Mahindra and Taj that we've spoken of, they're catered really towards the luxury traveler, the family traveler, the entertainment traveler. This is the first business specific travel hotel that we're discussing. And one post-pandemic feature that seems to have stuck around is that business travel is no longer a requirement to do business. You can do things over Zoom, and the culture of digital working seems to have got entrenched. And adjacent to that, what we keep talking about in terms of rising consumer expenditure, particularly for travel, is all entertainment and family travel. So, will Lemon Tree really be poised to capture this huge upcycle in the hotel industry?
Absolutely, Varun, because while Zoom meetings, online meetings are important, but nothing substitutes touch and feel. And business travel is not as bad as you think it is. It is also growing decently over the post-pandemic last few quarters. We have clearly seen that. And overall economy is doing well. See, hotel industry's prospects are very closely linked to the economy. And if the economy is doing well, there's industrial activity, there's infrastructure projects, and large companies like banks, telecom, if they're expanding more and more into tier 2, tier 3, then that's certainly going to benefit the hotel industry, especially someone like a Lemon Tree.
Fair enough. I think only time will tell. So let's do a quick whistle stop tour. Through the last two, East India Hotels and Chalet Hotels. I think the only common factor here is that they both seem to have beaten the market over a reasonable time frame, and they're the only two hotel companies that we're analyzing that have actually delivered good returns to their investors. Although Chalet has only been around for a short period of time.
See, Indian Hotel is Oberoi, again another fabulous brand, now owned by the Reliance Group per se. They've been a little slow in expansion. That's the reason why I feel that going forward also, their performance may be lagging that of the industry per se. But they have got fabulous properties on the ground, and this is one company which can get very good benefit of operating leverage, what we discussed at that point of time. But by and large, they are gradually losing market share and gradually losing mind share also within the hotel industry. Chalet Hotel, new player on the block, fabulous properties by the Raheja Group. It's been promoted. And again, a very underutilized company. So as and when capacity utilization goes up for Chalet Hotels, you may see good numbers coming through over there. So that's my take on these two. But if I may just extend it, one more trend which is very important from a capital market perspective is that before the pandemic, there was talk of OYO Rooms going public, right? But because of the pandemic, OYO Rooms went through a lot of turmoil and they were saddled with huge losses. But that is one company to watch within the industry. And whenever their IPO comes, it will be a very interesting development for the hotel industry and will offer a new investment avenue for investors.
All right. So why don't we summarize this podcast up? We know you're very bullish on hotels. How should investors position it in their portfolio?
They should be overweight in hotels. Go for the market leaders, especially Indian hotels. It's not a recommendation, just my opinion. And because of the large size, the business model to an extent gets de-risked because they have so many properties. So even if there are minor fluctuations in particular geographies, they may still do pretty well going forward.
Fair enough. And within the space, what would your top picks be?
I think Indian Hotels is certainly one of the important companies. Mahindra Holidays also like their business model because family travel is something which is going to gain a lot more traction going ahead, and that's where they have placed themselves.
All right. Well, I think that's a really nice and succinct way to explain how investors should play this theme. Thank you so much for joining us once again. And please do tune in next time as well. Hopefully, we'll have more interesting stock picks for you all.
This podcast is produced by Elixir Equities Private Limited, a SEBI registered research analyst. Registration number INA 0000004787. The information provided in this podcast is for educational and informational purposes only and should not be considered as investment advice. Investment in securities market are subject to market risk. We strongly advise all investors to read all related documents carefully before investing.